Welcome to No Nonsense Nonprofits. Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, we're going to talk about the audit process. What can you expect? And whether this is your first time or you're refining your approach, we want to be able to give you that ability to go through this audit process smoothly so that we can have clear financial transparency, compliance, and long-term sustainability for our organizations. We're going to talk about timelines, preparation tips, just so that you can feel confident with the whole process. So the first thing I want to do is do a step-by-step overview of the process. And the first thing that you will have to do in this process is to find an auditor. We recommend that you form an audit committee, whether that's the existing executive committee or a separate committee. And that audit committee is going to prepare a request for proposal or RFP. And you're going to send those out to various audit firms and collect those proposals and evaluate them. Now, you want to select a firm that has not-for-profit experience. So set the expectations of that. When you get those requests for proposals in, actually meet with the auditors. Talk to them about what your expectations are, clarify your timelines, and discuss what success is. Is that a clean audit opinion? What happens if there's not a clean audit opinion? Do you have some deadlines that you have to meet? And discuss those and make sure that the auditor can accommodate your needs. Now, say you've selected your auditor, you have an engagement letter, you've signed it, you've got the date scheduled. What are the things that you need to do to get ready? Well, you need to gather your financial documents. That's going to be your financial statements, your previous 990s, your contracts, your minutes of your meetings, your financial records, the ledgers, the support documentation. We're going to have to gather all that up. You're going to want to make sure that all of your accounts are reconciled and that every number on that statement of financial position has supporting documentation. So you're going to want to reconcile your bank accounts. You're going to do that investment progression from last year's balance to this year's balance. You're going to want to provide supporting documentation for your fixed assets and your depreciation, for your deferred revenue. What payables do you have outstanding? Those kinds of things. You want to have all that together. Your net asset roll forward, if you have restricted grants, you're going to want to show those restricted balances from last year, what was received this year, what was released from restriction, and the balances as of the end of this year. You're going to want to make sure your vendor lists are up to date. That makes it easier. So if you don't go through your vendor list and purge or make inactive those vendors you haven't used in a couple years, you might want to think about doing that. And you're going to want to resolve any data entry issues. You're going to want to make sure that after you've reconciled everything on the statement of financial position, that if you found any discrepancies, that you get those resolved before we send the trial balance and the general ledger to the auditors. So now that you're ready, the auditors are going to come in. They're generally going to do a risk assessment first, and they call that preliminary work, where they're going to get narratives from you on your processes, and they are going to look at your preliminary trial balance, general ledger, internal financial statements. They're going to do some analytical procedures, and that is going to determine the risk of material misstatement. And that is going to determine their materiality and how much testing they're actually going to do. And then the field work starts. They're going to come out and do that substantive testing. They're going to look at all those documents that you gather together. They're going to ask you for things like revenue and expense comparisons between years. Generally, the auditors will provide you a list of everything they're going to want well in advance, so you'll have everything the day they walk in the door. That's what they really like, is everything done the day they walk in the door. If they find anything, they're going to propose an adjusting journal entry. And they're going to talk to you about it, what their findings are, and you can agree or not agree to make that post that journal entry. That's up to you. These financial statements are yours, but whether you agree to post them or not could affect the opinion that they produce for the report. Generally, my finding is I've never, yes, we're doing this all year long and we're human. We may miss something, we may make a mistake, we may post something incorrectly. They found it. Let's just, it's not something that is going to put us out of agreement with generally accepted accounting principles. In fact, it's probably going to bring us in line with that. We post that, and then we get what's called a clean opinion, where they agree that the financial statements are not materially misstated. So that's part of the audit process. At the end of their field work, they're going to provide you with an audited trial balance, adjusting journal entries, and a draft of the report. You get an opportunity to look through all that, make comments, and get back with them, and then they will issue the final report. And that final report also generally comes with management letter comments that these are things about your internal controls that they would recommend that you change to have improvements. They'll also have a letter to the board of directors stating this is what they found during the audit, what the journal entries were, if there were any difficulties in working with management, those kinds of things. So there's lots of letters that they produce in addition to the audit report. So once that's completed, then you have this audit report that you can use for external purposes. You cannot present a financial statement and say it's audited without the auditor's opinion letter and the notes attached. So I just wanted to make that very clear. That package that you're receiving from them, that is the financial statement report, you can't break that up into pieces and give it to someone and say we had an audited financial statement. They all have to be presented together. So the nice thing about an audit is, like I said, they're going to come up with recommendations for you. So you're going to want to, after the audit is over, amongst your team, amongst your board, talk about what the auditors found and how can you make changes to improve your operations. And that's another one of these benefits of this audit is not only are we giving our external users confidence in our numbers, but we're gaining insights into improving our operations. The timeline for this usually takes a while. It's not something that happens like within a week. So let's talk about that. Your auditor selection, depending upon how quickly you want to move, could take anywhere from 4 to 12 weeks. The first round of RFPs, were you not satisfied? How long is it taking to get those meetings with the auditors done, and what's your timeline, what's going on in your organization? So it could take a while to actually select an auditor. To get ready for the audit, you yourself internally, I would plan 2 to 4 weeks. 4 weeks, I would really like to have the auditor's preparation list to make sure that I have everything. Sometimes if we have things that we need to get from external people or external entities outside of our corporation, like maybe a SOC report or an accounts receivable confirmation or a bank confirmation, that may take a little bit longer and beyond our control. And we would like to have those in-house before the auditors start the field work. The audit execution, depending on your size and complexity, can take anywhere from days to weeks. Like I said, they're going to do the preliminary field work, they're going to do the field work, then they're going to go back in the office and have a partner review everything. So that's going to take a week or two anyway. And depending upon what's going on and how complex, the field work could take a week on its own. And then the post-audit implementation, like I said, these are things that processes that we can look at to improve upon based on the auditor's recommendations. But you really do want to aim to finish this audit before you have to file your Form 990. If you need to file an extension in order to get the audit completed, that's my recommendation. You really don't want that 990 and that audit report to have different information. And if the auditors find something, which they generally do, and recommend a journal entry, if you've already filed your 990, then you might have to amend that 990. So let's wait to do those 990s until after the audit is done and make that part of your planning process. If you need an extension for your Form 990, Form 8868 is what you use to file with the IRS to request that automatic extension. Most states accept the Form 8868 and for their filing, but you need to check with your state to make sure that you are also requesting an extension for them. And sometimes the extension for the states is much shorter than the federal government. So you need to make sure that the state extension is a 6-month extension as well. Some are 3. Now, when talking about selecting the right auditor, we want to make sure that we're requesting that they do the right type of audit. So if you are just doing a regular financial audit, or because of your government funding, you have to have a single audit, or you want additional steps done to them to review your internal controls and do an internal control audit, all of that is going to affect the amount of time that the auditors spend, the price of the audit, and those things need to be established upfront. So make sure that those kinds of things are in your RFP when you're sending that out. Research the firms and make sure that they have nonprofit experts on their team. You could get recommendations from other clients or other nonprofits that have used them. Make sure that everything in your RFP is clear so that they understand what their responsibilities are. And if there's some confusion, talk about it and make sure that those things are entered into your engagement letter. And I want to encourage you to make a selection based on the best fit for your organization. So somebody who's expertise, maybe you prefer somebody who's local. Maybe you prefer a large firm, maybe you prefer a smaller firm, but make sure that they understand your organization and your mission and that they have expertise in that area. And then another thing, I can't tell you how important this is when you have an audit, preparing all year round. Just knowing that we have a new contract, or we have a bylaw change, or we have a new lease or a new grant. Just when those things come in, stick a copy in the audit file. Also, as you're going through and doing your month-end closings, make sure that you're doing the same steps that you're going to do for your year-end closing. That makes year-end closing happen much faster. You already have that support documentation for your prepaid expenses or your fixed assets and your depreciation or your deferred revenue. Those are part of your monthly closing. Easy peasy, they're done. And put a copy of those in your audit folder. So when you get that prep list from the auditors, you just go to that audit folder and just run down the line. Assign roles to your team members. When you get that audit prep list, make sure that all the team members involved know what steps that they're responsible for. So if you need somebody to get those minutes of the meetings, or if you need somebody to get contracts for you, or if you need somebody to prepare a 941 reconciliation with your salary expense on your general ledger, make sure that those people know what they're doing. Many times the auditors will actually grab additional information if their firm is preparing the 990. So they may want that compensation spreadsheet so that they can fill out for the officers and the board of directors. They may ask for that as part of the audit prep. They may ask for a statement of functional expenses for the 990 as well. So there's lots of things that you can do to assign to different people on your team to make the burden of preparing for the audit a little less cumbersome. And then just remember, again, those best practices. Look at your findings from the auditors and make those adjustments. If you don't have a clean audit, don't panic. The auditors are going to be telling you, these are the things that we need to do to have a clean audit. And next year that will change if you implement those changes. So take advantage of the expertise of the auditors. They see a lot over multiple different organizations and they know what works best. We want you to focus on swift and effective action in response to the recommendations. If you wait 6 months, it's going to seem less urgent to do. You may forget what the auditor said, those kinds of things. So get started, put an implementation plan in place, take steps to do that, because if you wait 6 months to get started, then you've got 6 months where you didn't change that internal control and you still may have an audit finding. Remember, audits are learning tools. I love audits because the auditors could always are looking for a way to help the client to improve their systems and improve their accounting. That makes the audit go smoother next year. It makes our organization even better and able to be more financially flexible. Just, I can't stress enough, pick those auditors' brains about how to do things, what they've seen in the industry, and utilize their expertise. Now, there's a few things that I want you to take away from this conversation. The audit process may seem very daunting, but with the right preparation and a trusted audit partner, it can become a valuable tool. It'll improve the transparency of your financial information. You'll be building trust with your donors and helping you if you need with those other external stakeholders. It will strengthen your financial management. Just take advantage of their expertise. And remember, our goal is not perfection, it's progress. Taking steps to be more accountable and more sustainable. So if you haven't had an audit and your organization is ready for it, start forming your audit committee, review your financial readiness, and reach out to experts who can help support you during and after the audit. Now, we do have a not-for-profit audit checklist. I put in the comments that if you would give us your email or your direct message information, we can send that checklist to you. And I hope this was helpful for you today. If you have questions on this or other topics, please let us know in the comment section. Of course, we always appreciate your likes. And remember, creating a bigger impact starts with stopping the nonsense. If your organization is dealing with nonsense, we'd love to help you cut through the noise.